What's up, guys? Look, boom, 500. It crossed below. Yeah, this boom 500, guys. The red moving average crossed below. Look, a spike. It just happened right now. Okay, yeah. This strategy works. It worked. It's a crazy strategy, guys. A very powerful strategy. Boom 500, crash 1000, crash 500, and boom 1000. It works for them. Oh, guys, it works for them. Oh, I'm expecting another spike for boom 500. Yeah. Let me place a buy. I want to catch spike. Let me catch spike for boom 500. Okay. Sure. I'm going to catch spike right now for boom 500. Let's see. I'm going to catch spike right now for boom 500 because this is a black candle and I'm expecting a spike for boom 500. Okay, guys, let's see. It's also work for crash 500. When it cross above, it spikes. Cross above, it spikes. For crash 500 also, and also crash 1000. Cross above, it spikes. So 1 minute time frame. Look, when it crossed above, at this point, it spiked. Guys, this strategy works. It works. When it cross above, it spike. It touched the green line. The red moving average crossed the green line above. This is what you just have to watch. It spikes, guys. It spikes. Crossing above, it spikes. Look, that's how it works. Let's check on boom 1000. Crossing above, it spikes. Sorry, it's for boom. It had the red moving average has to cross below to get a spike. It crossed below. It spiked, cross below, it spiked, cross below, and then it spikes. Guys, look, we're expecting another spike for boom 1000 right now. Boom 1000, expecting a spike. Yeah. Okay, guys, expecting a spike again for boom 500. Yeah. So, guys, this is how the strategy works. It works like each time it crosses above, you get a spike. These are the indicators. You can take a screenshot of it just the way you see it on my screen. Take a screenshot, guys, of the indicators. The period is 14. Apply to typical price for the commodity channel index. Start to pick the levels 100 and minus 100. Then the next indicator is the moving average. Period 10, shift 0, method simple, apply to close. Start for pixel, you click done. Then the next moving average market facilitation index. The volume should be thick. The line width is 4 pixel. MFI up for the volume up green. MFI down for the volume down black. MFI up for the volume down black. MFI down for the volume up green. Then you click done. Wow, another spike, guys, another spike. Because this okay, the last indicator is the average directional movement. Period 50 pixel. Start 2 pixel. The positive DI 2 pixel, you put a green color. Then the negative DI 2 pixel, use the color of the screen for the style, and the negative 2 pixel. While the levels are 0, 5, 10, 20, 35, 0 and 0, then you click done. Look, we got another spike. We got a black candle here which indicates another spike. Look, just after 2 candles, another spike. So, guys, we're waiting for a spike for boom 500. I told you I closed my trade 8 candles after the conditions are met. If it doesn't spike, and you can see this my trade, the reason why I placed this bar, it's because it gave me a black candle. That's the reason why I placed. So I wasn't on my trading platform when this condition was met. If not, I would have catched the spike, guys. I wasn't here, so I came just 2 candle after it spiked. So because I saw a black candle, I placed this trade, and if after 8 candles I don't get a spike, I'm going to close it. You don't have to keep your loss and hoping it will bounce back. No, you end up blowing your account. Guys, this is how to trade and make money for yourself. So thank you, guys. Make sure you hit that red subscribe button and give this video a thumbs up and share the video. So thank you, guys.